Welcome, ladies and gentlemen. This is Brad Matheny. It is the 19th of November. We're headed into the Thanksgiving holiday week, and the markets have recovered nicely. We're going to be going over the TTScanner Hotlist today. But first, I want to highlight a couple of things that we need to pay very close attention to. And that is that the markets are likely going to stall out a little bit over the next 5 to 7 days, possibly bottoming after or near Thanksgiving and starting to rally a bit higher from that point onward. Gold and silver may also start to rally quite extensively after the 7th or 8th of December. So expect a bit of a consolidation. We might see the US dollar recover a bit. We might see some melt up taking place. I'll say that again, a melt up process taking place with no real conviction or volume going forward. The markets have flattened out. We've seen this big recovery here last week in US and global markets in red. What I believe is going to happen is we're going to see a bit of a consolidation base taking place, maybe a couple of big moves, but nothing, in my opinion, excessive. I don't expect to see any plus 4 or 5 percentage point days over the next week. But after Thanksgiving, I think we could end up in a melt up scenario, moving higher, both foreign and US assets. And I believe it all boils down to, let me make sure I'm pointing to the right thing here. Hold on. That's the gold trend index. I believe we're moving into this scenario. So the fear index is down, moving downward. As long as it continues to consolidate, we could see a bit of a melt up scenario here, kind of like we saw back over here, a little bit of a melt up after some consolidation, maybe 10, 15%, maybe 20% before the end of the year. We are still seeing cash flowing into the economy. So we're seeing a big bounce in cash flow here, very similar to the bottom after the COVID lows. Remember, cash rallied back into this bottom. This was a very early base. Then we consolidated for 4, 5, 6, 7 weeks, then started to roll a bit higher. So understand, I think we're kind of in that same boat. We may roll a bit sideways until December 6th, 7th, 8th, 9th, somewhere around there, and then begin to accelerate into the end of the year Christmas rally. So pay attention. We could have some very interesting sideways movement. And I'll try to show this to you on a chart coming up. But long and short of it is, if we go back over here to the US stock market index, golds, there we go. So understand that where we're at right now, we could see a stalling over here, a bit of a stall out, a bit of rotation back into this area, kind of forming kind of an inverted head and shoulders formation. But in reality, I think we're back up into this area. I think we're going to stall out for another possibly 2 weeks, 2.5 weeks, maybe 3 weeks, and then move into kind of a melt up, which will carry into a Q1 2023 rally. So because of that, because of this sideways stalling pattern, we're looking at the TT scanner hot list really flattening out. And that's what we're going to expect to see. These are weekly triggers. We're seeing kind of a broad range consolidation, an apexing formation, and we're going to see these flatten out. We're not going to be expecting to see any really long-term triggers. We might get a couple of false triggers. You need to be very cautious of what to expect, and you need to understand that any new triggers we get should only be allocated with a very small portion of your capital. The way I'm explaining it to everyone is don't jump headfirst into these triggers. Don't even get up to your knees or your waist. This is only toes or ankle type triggers right now. When you're allocating money to any potential new trigger right now, you want to be very cautious, and you want to try to only use a very small portion of your trading capital into these triggers. We do not have any confirmation of any upward trend or downward trend. We're getting signs of a base or a bottom. Because of this flattening sideways price activity, these weekly triggers have no no real validity. We're not getting any solid upward or downward confirmation in the trending. So any triggers that are coming because of this should be taken with very small allocations. You can see here that the communication sector, this is the TTScanner main list. XLC went flat, IYR went flat, XLRE went flat, QTech went flat, SOX went flat, Nugget Miners Bull 2X is short. It looks like it's, I'm going to zoom in here, 19 weeks. It's already got 11% profit, has not hit any targets. We have a stop at 38.44. Our entry was 35.08, and we're at 31.20. So understand that we've seen a decent little profit here. Gold miners, I mentioned to you, and metals are going to flatten out over the next couple of weeks, in my opinion. This may hold up, but long and short of it, we're probably going to get stopped out of this eventually. XOP and XLE are still long, 40 and 44 weeks into the trade. We've hit both targets. We've got 39% and 49% profit in this trade. These will eventually get flattened out if oil continues to move lower. And if you're following my research, you already know that oil will likely trend down into the $62 to $65 range as demand wanes. The economy is kind of flattening out right now, folks. No other triggers. You can see that everything else is flat. We've got a couple of new bullish trends taking place, which are nice to see. A couple weeks back, everything was bearish. But generally, ladies and gentlemen, we're not getting any great triggers yet, and that's because the market's moving into a fairly flat scenario. Okay, wrong one. TTValue. This is the TTScanner Value Index. You can see we've got a number of triggers here. Let's see, 5521. So we've got a new trigger here in Cummings. That was one from last week. We're already up 0.78%. This is just 5 days old. You can see our stop is at 243.73. We got in at 248.42. It's currently at 250.31. We've got a couple of triggers here that are about a week and a half old. This would be MRK and Amgen. Amgen has already hit the first target. It's up 7.14%. Stop is at 263.25. We got in at 268.15. Currently at 287.29. And the other one is MRK. We got in at 98.50. Stops at 97.02. Hasn't hit any targets yet. It's up 5.82%. Currently trading at 104.23. These other triggers are 2 weeks old. One has hit a target here. That is PFG. So we're getting some okay trades. But remember, these are in a fairly flat market. We need to be aware of the fact that these triggers are fairly consolidated. So we're not going to see really big moves until we get some big breakout. These value stocks could really start to perform if we get a real melt up. So understand, with a small amount of capital, these new triggers here could actually perform very well if they sustain over the next 5, 6, 7, 8 weeks. Then we could end up getting into some sort of a trend, a bullish runner, what I call a runner mode, where we get into a real consistent upward trend. But again, we get a whole lot of triggers that are flat. We're not seeing broad market participation. It's more that you're looking at undervalued, fairly strong performers that are going to continue to perform fairly well. So if you look here, you know, the types of long triggers we have. Chevron, we have a long trigger, 45 weeks old. United Health, United Health Group. What is this, 83 weeks old? Wow, that's almost 2 years. Travelers, 2 weeks old trigger. PFG, 2-week old trigger, which is about 14, 15 days. MRK, it's about 7, 8 days old. And we've already up 6% almost. Amgen, about 8 days old, up 7%. And Cummings, just about 5 days old, up 0.76. These are pretty good performers. These are core elements that you're going to see producing decent numbers, producing good quality earnings and revenues. And that's why I think you're seeing these types of triggers. And whereas everything else is flat. Home Depot, American Express, Nike, Universal Corp, Scotts Miracle Grow, Cisco, Visa, all of these others are flat. And the reason being is they're just flattening out. We haven't seen any real upward movement yet. We haven't seen any real capitulation of an upward trend. Eventually, when the buying mode starts to pick back up, we will start to move into bullish trending. We will start to see more signals come up. But right now, we're not seeing that. So that's to be expected as the market flattens out and moves sideways. Last, we go to the core and the core inverse. This is the inverse, core inverse ETF list. We have no new triggers. Well, one here, ERY, which is a short. We are, let's see, 0.94% profit in the trade. Stop is at 29.83. Entry was at 27.78. Currently at 27.54, a little bit of profit. These are longer term triggers, TBX and TMV. They've hit, well, this one's hit one target. These others have hit both targets. These are longer term. They're already many weeks old, 8-9 weeks old. So look at that as 2.5 months old. And we have a number of triggers here that are trying to find support. So remember, this is an inverse list. So as the market moves up, these will likely generate sell triggers, okay? And that's what we want to be aware of. So as the market's moving higher, this list should generate a lot of bearish triggers and distribution triggers. The core list, which is here, so market moves up, we should get a lot of longer triggers. So marijuana on a weekly basis has a trigger here, 27 weeks old, already hit the first target. It's at 5.68. Stops at 7.04. Entry price is 7.79. We've already got 27% profit in this trade. All of these are longer term trades. 2 of them have hit target 1. 3 of them have hit both targets. 2 new triggers here to get flat in PBW and IYR. Everything else is getting kind of mixed. You can see the bearish and bullish triggers here. These new bullish triggers will turn into bullish trades if my analysis is correct and we see a melt up. So we're going to get a lot of trade opportunities here over the next couple of months for some really great trades. I expect, for example, some of the, like for example, the ARKK to potentially move higher. I expect the marijuana sector to roll a bit higher. We've come down off of some real deep lows here recently. We never got down below 450, but I believe the marijuana sector may pop. QQQ will probably pop higher. Transports will probably pop higher. The ARKQ will probably pop higher. SPY will turn bullish eventually. DIA as well will turn bullish. GDX will probably turn bullish over the next 3 or 4 months. So get ready. If what I believe happens really does happen, meaning we get some sort of a melt up into Q1 and Q2, kind of the start of a wave 5 rally phase, then we're going to see a lot of these move into a bullish new triggers as we start to get some real confirmation of an uptrend. Right now, though, as I've been warning you, things have been flat. We need to stay cautious. We are not going aggressively into any trading right now. Everything should be done with, think of it as just dipping your toes in. You're not really actively trying to hit home runs on some of these trades. Yeah, some of them have been pretty good for almost 2 years now, or over a year. In this case, these are almost a year here. But generally, these triggers over the past 60, 90 days have been, somewhat mixed as the market has kind of based and bottomed and is searching for direction. So for right now, we would want to try to stay as cautious as we could, knowing that we're seeking out a momentum base right now or some sort of new trend direction, which I believe is going to turn into a melt up rally through the end of the year and maybe very opportunistic come December, January, February. All right, guys, that's it for now. Now we will focus on gold and silver. I want to try to highlight this. So this is the custom metals index. I highlighted this in the custom index review. Gold and silver have begun a very strong upward move. And I believe we're going to see metals and miners move into a perpetual melt up for the next 2+ years. So be aware that metals and miners may be a very good opportunity for you to start dipping your toes in if you're not already accumulating physical. Now, very importantly, we have this. Once I find it, here it is, the gold trend index. This is one of my proprietary indexes, and I want you to see how gold is moving through these cycles with higher lows and higher highs throughout this process. The next rally phase should move gold and silver up above 2200, 2300 gold, maybe 24, 2500. We've got a very strong rally phase, and as soon as we get above this resistance channel here, we could see metals and miners really start to pop. We could and we should see it consolidate for the next couple of weeks, downward, consolidate for about 2 or 3 weeks, then begin an upward move. And again, I believe the 23 to 2500 target in gold will put us right about here, up in this blue line area, where we'll see another consolidation area. But again, ladies and gentlemen, metals and miners are beginning to look a lot like 2004, 5, and 6 to me, where we're going to enter a potentially 2 to 4 year melt up rally, maybe 200 to 300+% before we begin a big parabolic move like we saw from 2008 to 2011. So get ready. This could be a very big opportunity. Now remember, the U.S. stock market will likely move higher as well. And the reason for this is because we're likely going to move out of this consolidation uncertainty phase with the Fed with some sort of a pausing, some sort of a recovery phase, some sort of an opportunity moving forward for the next 3.5, 4 years. Then we move into another crisis phase. That's what my cycle research is telling us. So remember, right now we just need to be patient, follow the allocation levels, which remember is 90% cash for the most part. Only 10% should be allocated into trading. We should be looking at trading opportunities right now as the not necessarily the least opportunistic, but understand that we're not seeing any real trends yet. So you're not going to see any great gains. A 7, 8, 9% rally on 10% of our equity ends up being a 0.02 or 0.03% equity growth. If you're following my research, the idea is we're staying safe, we're not risking a lot, we're properly hedged. The metals position is going to start to perform well, and the cash position is protecting us against undue risk at the moment. Now understand that over the next 3 to 8 weeks, possibly, we could be moving into a vastly different environment, upward trending, melt ups. We could become more aggressive in our trading, but right now we're still sitting safely protected, trading away if we want to, but trading very small amounts. Okay. Follow me on Twitter, follow my YouTube, tell your friends about my research, and get ready for what I believe is going to be a very strong precious metals, gold, silver, miners rally phase over the next 5+ years. I've been telling you about it for more than 2 years, about how this base is setting up. This was 2020 COVID. This was the rally prior to COVID. Look at this chart. It's melting upward. And the next phase is just incredible, is really parabolic. So if you figure a base of gold at around $1,700 to $1,800 and figure out that that's the same type of base that occurred in 2003, before we saw the rally up to 2000, you're potentially talking a 500 to 700% rally in gold from these current basing levels. And that's going to put gold up 9,500 to 11,000. I know it seems ungodly, but understand that this is what I believe is capable of being done. We'll see what happens as we move closer to the cycle apex, which is 2028, 29, 30, 31. That's when we start to see the real parabolic move in gold. All right, guys, talk to you soon. Bye.